Karwa Chauth, I think so.
Yeah.
Okay, so good morning, good afternoon, everyone. Welcome to 28th Perfect Health Mela. We are live on Facebook, YouTube, and many other forums. People who want to join this session, they can join on the Zoom directly also and ask the questions from the experts. Our Zoom ID is 841-4731-1677. We have an all-day sessions going on. We also have a legal session coming up. So today we are talking about financial health. We all know finance is one of the most important area which is directly linked to a health and medicine. You know, you talk about a personal wealth, you talk about any emergencies. If you are sorted towards your finances, if you are sorted towards your finances, I believe the most of the things are taken care of. And a lot of people do say health is wealth. But again, we are talking about the other areas where how do we create wealth? Where do we create wealth? It is very, very simple to create a wealth and destroy the wealth. For this, we have our two experts. I, Saurabh Agarwal, former Citibank, Director of Heart Care Foundation of India, would be interacting with Nirmal Bansal. He owns a company, iVenture Capital. He's been a seasoned investor and has been advising a lot of clients. He will introduce himself. We also have Mr. Amit Malhotra. He's a Vice President of DSP Mutual Fund, and he heads Delhi. So welcome on board. Today, we will be interacting. We do get a lot of questions about how to invest, where to invest. One basic question is fixed deposits are not giving more than 3-4% return. People do not rely on any other investments. A lot of people are scared. So one particular portion is the fixed deposits, the safety. The other people who are really today looking after the equity markets, who are looking after creating a wealth and considering markets from 9,000 levels have gone to 16,000, 17,000, 18,000 levels. People are asking questions. Do I need to invest at this level? Should I wait for the fall? Then we also hear a lot of terminologies like fixed income plan, ULIPs, all those things are there in the discussion. So let's talk to the experts. First, we will do an opening remarks. So Amit, would you like to open your would you like to give some opening remarks before we can start the session?
Yeah, sure, Saurabh, and thank you for this wonderful opportunity. And I think so that this is one of the buzzing question around markets at 60,000, and a lot of people are excited, as Nirmal will vouch this also, because the job of a financial advisor, especially in these times, these are one kind of a phenomena. Last time we have seen this phenomena was in year 2004 to 2008. This time it's even more bigger because people are at home from last 1.5 years, and there has been a lot of excitement in terms of markets going up. The queries have definitely gone up, but yes, these are markets where people have to be a little cautious. They have to maintain their asset allocations, and these are times where people make general mistakes in these markets. So I'll try my best to answer whatever queries you're going to put to me, and along with Nirmal, we'll try to make this session work for your viewers.
So can I invite Nirmal for opening remarks?
Yeah, good morning, everyone. Saurabh, thanks a lot for inviting me, and Amit. See, India is a fantastic story. Definitely, everyone is worried. Nifty in the last 1 year has itself, year to date 20%. In last 1 year, pre-Diwali, I remember last Diwali it was 12,500 Nifty, as we all track Nifty rather than Sensex. And today Nifty 18,000. So approximately 50% return, which is the best market in the world, I think. And so, definitely euphoria sentiment is very, very strong. And See, I'll not say I'm cautious, but cautiously optimistic. Definitely, correction is a part of market. It's all every time this happens. So, we'll discuss in detail how we should shape up and how we should focus on cutting the noise and focus on building wealth rather than just going through sentiment that India is good. So every time we should not change the instance. And I agree with Amit. We should focus on the what should not be done rather than what should be done. To create a wealth. And we there definitely, even if we stick to plan, a huge wealth can be created if we are focused.
Okay, so let's start with what all options do we have today to invest? It can be a safe side investments, it could be a risky investments. Obviously, any risk which has been taken will be compensated by the returns. Risk is always being divided into the component of time period of holding. So you cannot say that your money is safe if you're only investing for 3 months. But if that 3 months window turns out to be 3 years or probably 10 years, then obviously the risk gets divided by the number of days. So if you are investing in a fixed deposit for a 10-year, or if you are depositing in an investment which can turn around for a 10-year, I would say the risk element goes down. So considering all those options, what all options asset class do we have? When I say asset class for our viewers, asset class means what all categories we can invest. So property is there, debt funds are there, fixed deposits are there, PPF are there. So over to you. What all categories do we have to invest where people can invest? Doesn't matter risk or.
I think most of us know, there are different asset class available in India today, but primarily I think, why people invest in fixed deposit, because, there is a lack of understanding how equity market behaves. And I think a role of a coach, financial coach. And that is my answer to everyone, that everyone should hire a coach rather than doing it themselves. That is my first answer to everyone, because we all need a coach. In spite of knowing we can go through Google, we can do it. Today, everywhere, there are hundreds of platforms available online where what I get as a lot of investors after 4-5 years. Yesterday also in LinkedIn, one of the investors mentioned that I have 4 apps, investing apps. So, is it good? I answered him, it's not good. It's creating a confusion. It's an analysis paralysis for you because you are doing it yourself. And my answer is again, that everyone should have a coach first to understand what they want, because every individual investor's need is very different. And, as an asset class you are mentioning, definitely a senior citizen will have a very different view, because for him, wealth protection is more important than wealth creation. And the people of our generation at the age of 30, 35, 40, our focus should be on increasing the financial net worth rather than focusing on where I will get the better returns. I think the whole idea should be how we can increase the financial net worth from today to next 10 years. And that then matters which instrument I want to invest in. So that is a big picture one should look at rather than what is going to happen next year, how much return I'm going to make, because in economics, there is a theory called mean reversion, so everything comes to its mean. Today, you might get 50, but in 3 years, CAGR return will not be more than 15-18%. So you look at a broader picture. That is my answer, that first understand every individual's thought process is very different. And we have all the asset class available, and risk training is very different. What is risk? We should know risk is not about loss of capital alone. It is a volatility. So, it's a detailed discussion we can discuss on that. And fixed deposit, people say risk free. Okay, it's a perception, but there are better asset class in terms of where we'll get a better tax benefit. If somebody's on higher tax benefit slab, then there are much better fixed income instruments available in India today. So for HNI first, yeah. So
Amit, how would you, like Nirmal mentioned about choosing a coach? Again, there are a lot of what we see, a lot of queries comes in forward is that how do we choose a coach? There are a lot of people where they just go in the market and try to sell stuff which has a higher revenue for them.
Correct.
But there are very few firms which look after the interest of a person. So let's say we talk about ABCD Bank. They get a query, they get a request from a top end person that, okay, this product is there. Why don't you just go and sell? It will give you so much of revenue. And and the juniors who are there selling as a wealth manager, they just simply go and sell it. So how do we choose a product and a coach in that category? I would let you answer that question.
So, Saurabh, that's a very good question. But coming to your first question to Nirmal was about the finance card. How can you choose a perfect asset class for yourself? My answer to that is that it's personal finance. So personal comes first when you are choosing a asset class for yourself. Every asset class has certain advantages and disadvantages. It depends upon a person to person that what kind of risk appetite or risk averse he is or she is. The point is that the maximum mistakes which happened is that people try to chase a category which has already delivered. We have seen the same cycle happen during 2011-12 real estate cycle when bulk of the investors parked their money in real estate, and it has not moved in last 8-9 years. It is going through a very bear cycle. So we are seeing some green shoots over there. The only point is that a person who is investing his money should need to ask something. One thing to himself or herself is that why I'm investing in this asset class today. Is it a herd mentality? If everybody is investing in asset class, is that asset class is correct for me? That's the first question people need to answer. Coming to a second question about the coach, it's again a very difficult query, Saurabh, because everybody will tell you that he or she is the best coach, right? How can you identify a good coach? A bank can be a good coach. There is no question about that. If your relationship is handled by a good RM, I'm sure if he understands risk, because the role of a financial advisor is to assess your risk. I was reading a journal somewhere. It was telling that during basically doctors who do surgeries for their patients, if they come across to do a surgery for their own family members, they refrain to do it. Why they do it? Why they don't do a surgery on their family members? Because they think a lot about their own family members, right? Same thing happens when you're investing and you're thinking a lot of things about your own money. When you're thinking a lot about your own money, the chances you will make more mistakes on a higher side. That's why you require a person who is neutral in your life. How can you identify whether a coach is a good coach or a bad coach? That's a journey which an individual has to make choices on his own. There are chances. There's a 50% probability that you hit your call with the right person at a single go. But there are chances that during hit and trial methods, you'll try and understand that certain decision which was taken by their coach was not apt for you. So it's a very difficult combination because I deal with a lot of distributors. I deal with a lot of bankers. Everybody has mixed results. It's a function of market also. If people are giving us money at current levels and expecting to give 30, 40, 50% returns in 2 months, 3 months of time, that's not a correct expectation. Yes, every distributor or every financial coach tries to minimize losses, but eventually these are markets which is in nobody's control. You have to give time, because in power of compounding, the biggest element is time. So if you're investing in a real estate for say 7, 8, 9 years, 10 years, you don't track your real estate investments because there is no way how you can track them, right? But when it comes to investing, if you're investing in stocks or if you're investing in a mutual fund, there's a daily NAV available for you. That change your behavior in market. So if market has delivered a 50% return today, you'll be super excited seeing your portfolio that my portfolio is up by 50%. But it's a notional profit for you because you haven't booked anything, right? So what we see that good coaches generally do your investment on the basis of your goals. They try to understand that what kinds of goals are there in your life. It can be your child education or on a loan or a home which you want to buy or a vacation which you're planning to do in next 2 years of time. So people who are doing genuine business, ideally, I have seen this common trait in a lot of coaches that they do goal linkages along with their investments.
Very nice answer. I agree, and I will give you a real-time example. I had one of my very close friend, his father. He had a investment done in some shares. So out of 10 shares, like 6 shares were zero, delisted, but that 4 shares has actually created a wealth, which he said that he would have never had it if he would have watched it. He was amazed to see the kind of wealth that 4 shares were created, and it was like a jackpot, digging your thing and suddenly you get it. If in this scenario today, you rightly mentioned that the real estate, if you invest, you don't look at it every day's value. You just buy it and forget it, and that is why real estate people say that property कभी पैसा लेके नहीं जाती है, हमेशा देके जाती है. वो इसलिए नहीं है क्योंकि वो प्रॉपर्टी, अगर आपने वो प्रॉपर्टी में पैसा लगाया होता और 3 महीने बाद वैल्यू करा होता तो हो सकता है प्रॉपर्टी पैसा ले गई. बट अगर आप वो 10 साल 20 साल 30 साल बाद देख रहे हो तो इसलिए वो प्रॉपर्टी पैसा हमेशा देके जाती है. Similarly, when you invest, your core portion of investment is that you need to invest in a good value company. If your basics of investing is correct, then you don't have to look into it for every 2 months, 3 months and track whether it is a loss or a gain. A long-term investment has always given a good return. So it can be as good as a property investment. So we will start
I beg to differ on this. See, I have my own views. I can discuss for quite long on this. First of all, there is a disclaimer that whatever we will discuss, it's all for knowledge and training purpose.
Absolutely.
And I don't have any interest in any stocks or any asset. I'm not advising anything to anyone here. Okay. So this is a general knowledge discussion. This is my disclaimer because we are on SEBI regulations and we are a SEBI registered stockbroker also.
Absolutely.
So, so what I want to say is real estate, as you say, the North Indian especially or all India loves real estate because the time was different. The economy of 1917, 80s and 90s was different. 1991, there was a reforms and 2000, see the lot of FDIs, FIs, and there was a difference in the thought process as an asset class as well. What I see is land definitely creates wealth, but property, a lot of youngsters especially get confused, They all, first thing they want to buy is first car and a house for themselves on loan. And then they are in the mercy of a bank. They think that they are, they own this asset, but end of the day, they are. So it's a long debatable personal finance issue where I personally see I'm a victim of it for last 15 years. I think real estate, land is fine, but all these flats that people buy in the perception of creating wealth, or they think a 50 lakh flat will become a crore. Hardly they beat inflation, even if that does well. So, that's why my focus is what not to do. We all focus on what to do. Hum ye le lete hain, wo le lete hain. The focus should be on, my thing that it gives a happiness, except their own home, which you want to stay. That is a different thing. But, we don't have so much of time to make mistakes and then learn. So at the age 30, somebody buys a property. At 40, he realizes, oh, I have not made any money. Then again, he has lost his 10 years of compounding, which Amit says time is the best friend. Absolutely. So the flat price, you see Noida, Delhi, anywhere, how much in 10 years they've increased.
Yeah, and also there's a property which gets stuck. So you can't revise as easy as your fixed deposit or investment.
Lot of hidden cost is there which we don't see. Maintenance, taxation, duties, whatever. So this is a perception which is created by belief set by a lot of advisors, agents, or who, because no one is ready to understand. It's all perception that, flat will give me money. So I think land is fine, but manufactured property is a depreciating asset. It is not appreciating asset. And we should not buy flats, as per. It's a matter of just chance that you make money and you think. And it's again a biasness, which Amit has a very good expertise on biasness. He speaks very well on biasness. That one good decision happens, again, you make the same decision and then eventually you don't make any money. Absolutely. So I think financial assets makes a very important role. We all should learn. And today, most of the people that I meet, they are just doing speculation trading in terms of name of investing and connected to social media. So again, it's a mistake, because it is all temporary happiness. I'm shocked to hear, when I was reading cryptocurrency, which is not yet legal in India, has 10 crore clients. Yesterday I was reading on a newspaper, and Demat account in the last 75 years of independence is just 4.5-5 crores. So this is again, this shows that we all want
money,
to make fast money.
Everybody wants easy money.
Easy money, which doesn't last, and there's so it's not regulated yet.
So Saurabh, let me give you an example. Let me give you an example. Sorry, Nirmal, I was forced because you use right terminology over here that imagine Sachin Tendulkar being Sachin Tendulkar because he practiced day in, day out on the net practices part, right? Imagine an investor who doesn't know anything about balance sheet reading, but he's investing into stocks and making money. So that's a bad process with good outcome. But one fine day, he'll realize that a bad process will have a bad outcome. So Sachin will never be a Sachin because he has spent hours and hours doing net practice for his matches, right? But as investors, the so-called investors today, they're not doing any kind of research work when you're buying a company. It's just pure luck. Though I am a firm believer that we are in a business where luck plays a very important role. You have to be super lucky in your business when you're making calls, whether you're buying a real estate or whether you're buying a stock, you have to be damn lucky for earning money. But if there is no process behind your luck, luck will not last long. So there has to be great process. You will have great outcomes after that.
That's why I said hire a coach. That
Yeah.
was my premise behind it.
Yeah.
Every field you need to have a coach. Every field you need to have a guru, not only
Yes.
investments.
Yes,
So it
yes.
can guide you. Experts, even for a field of medicine or a field of, what you want to become in life, you need to have a coach.
Yes.
So that's the basic theory. But when you choose a coach, you need to be wise. Don't close your eyes and just say because somebody knows it,
Yeah.
just to invest.
Yeah.
So we will keep on going discussion, and we can mix and match between Hindi and English, doesn't matter. We will also start taking questions. So I see a very nice question coming in from Sakshi, who is at the age of 20 years. She says, is it an appropriate age for start investing? I love this question personally. I know we know the answers. I know what Nirmal's reaction was, but trust me, there are people who are, at a age, I did not start investing at the age of 20. I regret that. I started doing investment at the age of 30. Not that I'm very old, I'm just 28 now. I'm going in negative, but but I regret I did not even, I would say, Sakshi, you are late. Am I right? Start investing when you're born. Tell your parents whenever your kid's born, start investing. Why to wait for 20 years? So I will let you guys answer this question. My answer is, it is already late. You should start investing as we talk.
So, Nirmal, can I take this one?
Yeah, please.
So, Sakshi, that's a very good question, because if you know that you are spending your money today, so you can start saving now, right? If you're not spending anything, then you can wait, right? But everybody at your age is spending today. I can give you my personal experience. I can share my personal experience. I've got two boys. My elder one is around 11 years old, and his SIP is around 11 years old. My younger one is 6 years old, and his SIP is around 6 years old.
So let's Amit, I'll interrupt you. So SIP is an investment form which you do it every month. Okay.
Yes. Yeah. A systematic investment plan which you have to do every month. You have to basically plan for your future. So being very early into this profession, I joined this profession in 2004. A bull market started, and a young guy who just got into his first job, seeing a lot of money making activity here and there, and I stuck to my guns. I started my SIP in year 2006. My first SIP took me 2 years to understand this business, right? The mistake which I didn't do for my kids is that right from their birth, I've started their SIPs, because eventually, like Saurabh has told you, that you're 20 years late. I can ask this question to my dad, that why you haven't invested SIP for me, because the answer can be there was no SIPs available at that point of time. There was no mechanism available at that point of time. But imagine my sons asking me this question 15 years from here, that SIP was available when you were working. Why haven't you started SIP for me? So I don't want to be, answering those questions to my kids. So what I've done a smart thing, that a small amount, a small contribution at a very early age, I've started for both my kids. They have a separate bank account under guardianship. I am running those accounts for them. But the mandate is that till the time I'm working, SIP has to increase year on year basis, on the basis of inflation adjusted basis. But yes, I have to invest for their career, for their future. And after 20 years or 22 years, if they decide to move to some other country, if they want to pursue studies, if they want to pursue any other opportunity in their life, there is an amount which has worked equally hard in last 20 years for them. And next 70, 80 years, they have to slog. So I have done my bit by starting their SIPs. And it's never too late. The only point is that you have to commit to a certain thing. As a youngster, there are a lot of things available for you today. You can buy a 1 lakh rupee Apple phone today, or you can start a SIP for you. The choices are immense for you. As a youngster, the dilemma is that if you have peer pressure, we have peer pressure when we started working. You have peer pressure when you start going to colleges. The world has changed a lot. Yes, the aspiration has changed a lot, but you have to make a fine balance between the two. You have to invest for your career, for your future. And yes, you have to enjoy your life also.
So we will keep on taking questions. I see a lot of questions are coming up. Very lightly answer. So Sakshi, the nutshell is start investing today. You can invest as low as 500 rupees per day. There are two theories which I used to follow. Do not save what is left after spending. Spend what is left after saving. So just in case if you get a pocket money or if you get an income, save a portion of money and then invest whatever you want to invest, because you've already taken care of your future. And there is also another thing which I want to mention is it is never too late. Do not rely on the first income. Create a second income by investing. And this income will help you for your retirement. So again, there is another question which has come up is, do you really believe in buying and forget strategy for investing perspective in direct stocks? Also, while exiting or profit booking, which parameters needs to be considered? Nirmal, you want to take it forward?
Yeah, I'll say, it's absolutely not right to buy and forget. It's easy to say all these things. I think if you want that, you should buy index funds, because sector changes, stock changes, market is so dynamic. What was relevant in 2010, if you go back to the history, you see Sensex in 1980, the proportion of out of 30 stocks, 15 doesn't exist anymore. So like Arcom was there in 2010, a biggest communication and telecom company. Today it does not exist. So like Kingfisher was a fantastic company in 2010, best airlines. Today it is no more. So idea is it's very difficult to answer all these things, but definitely there are a lot of stocks we also buy and have a belief in who has a competitive advantage for a, like I'll say example of Pidilite Industries. There is no substitute of Fevicol. So I am buying and hold, but depends on the stock and sector. So one should not make a common judgment out of it. If you don't understand, you should buy mutual fund or index funds or ETFs. If you have expertise in stock ideas and a conviction, like ITC, Hindustan Lever, HDFC Bank, a lot of people have a conviction and they buy and write, but you can't forget, you have to review it.
Absolutely. But again, the question is, if you would have reviewed it, you would have sold on the profit. But again, I agree with you.
It's a personal judgment. So I don't sell, depends, it's a human, that is a learning. That is a learning that's why you need somebody to, work on these things. It's,
okay.
You have to control your emotions.
Saurabh, it's very difficult. If you don't look at your portfolio values, the more you see it, the more it will go down. This is my philosophy in life.
Yeah.
The point is that if you have invested in an index fund, as rightly said by Nirmal, and if you did nothing in last 40 odd years, you have gained almost 14% CAGR returns. But people generally, if you buy a stock today at 100 rupees and it becomes 150, you will sell it off.
Absolutely.
But there are so many examples that, long-term wealth creation is done by people who are no more in this world.
Okay.
So you have to forget what you have bought today, but that's not a way, or that's not an investor behavior is.
So
I will add
is
to
asking.
I will add to Amit's thing. End of the day, what do you want? End of the day, again, you want to create wealth out of it. So if somebody invested 10 lakh rupees, how fast you can double it or triple it? In 10 years, if it grows at 14-15%, you make 3x your money.
So that's the power of compounding. We'll come back to that. Mudit is asking, currently there is too much of information everywhere. Any source where we can read, analyze the company's markets and make a decision? Obviously, gyan har jagah mil raha hai. We are getting a lot of information. People are getting confused.
Yeah.
So
that's the nature. A lot of research reports available by a lot of investment bankers, banking companies. So you have to make your own, because one of the research report you will find buy of some banking stock and the same other research house or a company will say sell of a stock. So I think that's why I said for these kind of confusion, I think except for high conviction bets, you should focus only on give it to fund managers or experts to manage your money.
Okay. So there are two questions which I will club it. Sakshi is again asking, who is a 20-year-old person wants to invest. For someone who has no exposure in investing or cannot afford a coach yet. I don't know why you cannot afford a coach yet, because coach is not something which, again, we'll answer that. Can you suggest a starter kit for investing? And another question which was there is, what are the best options available today to invest? So let's answer this question, and which will cover up a lot of questions, I think, which is on the screen.
For Sakshi and for many youngsters who are watching this thing, you have to read a book called Rich Dad Poor Dad. That was my first book.
Can you say the name again?
Rich Dad Poor Dad.
Rich Dad and Poor Dad. Good.
Yeah. Right. So that will give you a lot of clarity what you should not do in your life. It's a great book. It's a beginner's book, and I have read that book. So early part of my career, I've read that book. I was very fortunate enough because one of my senior told me to read that, and that book has changed my perspective towards investing. Generally, if you're investing today, yeah, so you can buy, Sakshi, you can buy an index fund, right? You can start whatever amount you can plan for yourself. Just start a SIP in start systematic investment plan in an index fund. That will take care a lot of your investment decision because index keeps on changing as rolled by Nirmal. That in last 40 years it has changed its face lot many times. You basically participate in the best Indian companies there. The second question was, Saurabh, sorry, I missed the second one.
What are the assets available to invest today? What are the options to be available to the invest today? Like if somebody wants to start in investing today.
So as far as mutual funds are concerned, there are a lot of funds that there have been a lot of categorization of funds available for you. As a beginner, you can start with index fund, then you can move to large caps funds, mid caps, small caps, multi caps, flexi caps. So there are a lot of funds available for you. The point is that in the initial part of your life, you just need to create that disciplined habit of saving money every month. So systematic investment plan covers that for you.
So I'll just take a minute to explain what exactly is a mutual fund. Basically, if you want to invest in, let's say, a share called Reliance, or let's say share called, which is the most expensive share where you cannot invest, MRF, let's take it MRF. Okay. So again, quotes and quotes, we are not promoting any brand, but let's say MRF share is very expensive. If you have 1,000 rupees in your pocket, you really cannot invest in MRF. Okay. So a mutual fund is where 10 people, 20 people, 100 people club together, mutually put the funds, and that funds invest in one particular script or different scripts. So it's like mutually you are coming together to invest in a particular theme, category, or a common goal. When we call about thematic funds, you have if you want to invest in only a technology space, we have technology funds. If you want to invest in a pharma space, we have a pharma funds. If you want to invest in a gold, we have gold funds. If you want to invest in even RBI bonds, we have dynamic bond funds over there. So mutual fund is a way where you can invest money into different categories where you do not have to take a burden of understanding the product, but you can have a fund manager who is really come up with an experience. Yes, he will charge a fees, but it will not be charged only to you. It is a fund fees which gets charged from the pocket of the funds. So you technically don't see a fees attached to it. You can invest through directly or you can invest indirectly. It does not matter. There are a lot of options available. You can just go online, open an account very simply, and start investing while you are sitting right now. It is not a very rocket science. It is very basics. You can start investing as low as 500 rupees. Once you see a profit, once you see some kind of a advantage, you won't believe it. You start investing at 10,000 rupees. After 5 years, if you see that fund, you will really see some magic. Oh, how can I save that 10,000 rupees? So Amit, I'll tell you how I used to invest. I used to start investing at as low as 500, 1,000 rupees. जब एक बार ये 50,000 रुपए कटता था ना अकाउंट से, तो मुझे लगता था यार ये मेरे 50,000 रुपए कहाँ गए, किसने ले लिए मेरे 50,000 रुपए. But what I started doing is I used to go out, eat गोलगप्पास, ठीक है, यहाँ डिनर करा या लंच करा, तो 1,000-2,000 रुपए छुपते नहीं थे किसी को, वो अकाउंट से निकलता था, पता भी नहीं चलता था. When I start doing that, I start investing every week 500, 1,000, multiple. मैंने कभी भी अपनी सिप में ना बड़ा अमाउंट नहीं डाला, बड़ा चुपता था अमाउंट, एकदम से निकलता था. बट छोटा छोटा इन्वेस्टमेंट करके ना, व्हेन आई एक्चुअली सी आफ्टर 5 years कि मेरा पैसा कितना हुआ, आई वाज लाइक वाओ. देन आई रिमेंबर वन ऑफ माय फ्रेंड्स वाज आई वाज ट्राइंग टू डिस्करेज समबडी स्मोकिंग. तो मैंने उसे बोला कि तू कितना पैसा खर्च करता है. ही सेड आई बाय अ सिगरेट फॉर 500 रुपीस पैक. तो मैंने उसे बोला कि लुक, the amount of money you spend, if you do a sip on that, now there are very theories behind it, I don't want to get into that, but you will be very surprised. Even a 500 rupees can create a magic in your wealth.
So the best part is that everything which you're going to save is going to come back to you. So, if you have time in your hand, basically you're saving for your future. And that's a very difficult thing to do today, because as I've told you that the options available for people today to spend a lot more. You have Amazon sales, you have Flipkart sales, people do impulsive buying over there. So stock market isn't the only market where you have sale where people don't buy. So
you're right.
Absolutely. और एक और चीज का मेरे को एग्जांपल I want to highlight over here, and this has come from a Nirmal's team only. He was one of the guy explaining to a lady in our forum, saying that सर उसने बोला कि मैंने ना एक इन्वेस्टमेंट करी थी, वहां पे 1 लाख रुपए लगाए थे, and that investment is now 550,000 rupees. I've lost money on that, but that value of the just जो share लिया था, जो mutual fund लिया था, वो बहुत अच्छा है. I'm still convinced about it, but I lost the trust and I want to sell it back. So he responded back saying that, ma'am, अगर उस investment को आप LV back के replace कर दो, now LV bag for you has a value.
Right.
ठीक है, अब वो 1 लाख रुपए का आपने LV bag लिया, which will not appreciate. It is a depreciating asset. It will go out.
Right.
But you have a value to it. You know that you will use that value. तो आपने LV bag लिया, अब वो LV bag 50% off पे आया, तो आप जाके अपना बैग बेचोगे या एक और लोगे? And that lady was like lost. I will buy one more. Then why can't you do that same in your investments? Why can't you average your investment? Obviously, I don't want to promote an averaging of a share where the value of the share is not there. If you really know that this company or this mutual fund is doing very well, when you do a SIP, you get that benefit of buying the same particular stock at a cheaper price. Sale lagi hui, aap le lo. So your comments on
I
it.
remember the same example when Nestle happened. 3 years back, there was some
Maggie issue.
Maggie issue. Yeah, I remember.
Maggie issue, yeah, I know.
The stock went to 5,000 rupees. Today, it's again 20,000 rupees.
Absolutely.
In 3 years, So the idea is when you have a conviction with Nestle, who contributes 97% of the baby formula products, that Lactagen and all that we buy for, it's as a monopoly. So you can see, there are only 2 companies, Abbott India and Nestle, who contributes to baby products. So, these companies should have a high conviction. Same example that you're saying. So whenever you get a good reasons to buy high conviction ideas, you should not think twice. Yeah.
So Saurabh, I think so that, it's a behavioral thing also, that people who are investing, who are coming to stock markets or real estate market or anywhere they're going, the only thing which they think about is, I'm going to earn some, money out of this trade. The problem is that if you have 100 investors, all will not make money, because the experience of all 100 investors is to make money from this market. The point is that if somebody is selling something and you're buying something today, both are right.
Both are right. Absolutely.
The issue is that if you can control your, greed, if you can control your fear, you have to ride these markets. Markets today at 60,000, that doesn't mean that it cannot go to 1 lakh. But the journey from 100 to 60,000, it has got lots of ups and downs. Investor doesn't want to participate in those downs part. They only want to participate in the upsides. That is just not possible. So you have to spend time here to make returns. Nothing is free over here. The only thing which I want to communicate, because I deal with a lot of investors and advisors, everybody's coming here to make money. And they don't think that they can even lose money in this market. And then the accidents happen. So you have to be very cautious. You have to understand what kind of risk appetite you have, how much time do you have, what kind of investment decisions. And rightly, you have put in a perfect example over here. You can see that market is not a straight line journey. It moves ups and downs. So from 100 to 60,000, it's not a straight line journey. You have to participate in all these things. Last year, what has happened is people have seen this scam series, and they have portrayed that, Harshad Mehta was a hero. So I leave that choice to different people, how they think about that. But people have taken this line very seriously. Risk hai to isk hai. That is not correct. It's your hard-earned money. You have to understand that scams will happen in this market. People will lose money. You cannot put your money by thinking that I'm going to gain something out of this trade. No, you can't. You have to ride all these things. Ketan Parekh, Satyam scam, Harshad Mehta scam, Commonwealth, Telecom. Still Sensex is at 60,000, Nifty is at 18,000.
Straight line.
Straight line. But that straight line has taken 40 years.
Absolutely. So the point is, if you know the Indian growth story is good, and you will get, if let's say if people are investing at these levels, it cannot be possible, because you can't be very perfect to judge a lowest of your levels. The point
so
is
last year market has given you that opportunity, right? 23rd March was bottom for this market last year. How many people have invested? So when everybody today, if I talk to my friends, they are giving me stock tips. Imagine.
Yes.
Last 15 years, I was telling them to start investing back in markets, and now they're giving me stock tips. That means that it's not easy. Na? You cannot have Mukesh Ambanis in the world. A lot of Mukesh Ambanis, there only one Mukesh Ambani, right? So money can only be made by people who are in minorities. Majorities cannot make money.
Yeah, but majorities can be little sensible to invest and
Yes, so that's why
create a
this
wealth.
approach comes into picture. If you don't know anything about markets, hire a good coach, start investing into markets by systematic investment plans, and plan for 15, 20 years. People invest in LIC policies for 20 years. They never question that what kind of returns I'm going to get there.
And same thing I want to say, all these insurance companies, short way of becoming poor, but we still believe, again, there's a lot of contradiction. I can face this question, but I think it makes sense, because I think this next decade is going to be of India. We are just 3.5 trillion now. Our next thing that we compete with the different countries, China, and they are 6 times ahead of us, 10 times ahead. Or US is 40 trillion now. Amit, how much? I think 40.
Yeah. So we
See,
are
imagine
7 trillion, and
so much of
there,
gap.
there are certain things which this government is doing, especially in the second term, and we are just seeing that glimpse of that only.
So it is not the timing in the market, it is the time in the market.
Time in the market, yeah.
Buy right, sit tight, and hold on to it. Have a conviction, have time with your side, and ride on it.
Okay, so currently markets are all-time high. What should be our strategy? What should be our lump sum money to be invested? Should we invest as a lump sum hold or keep investing on a regular basis? I think your question has its own answer.
So I'll go with the second one, invest regularly.
Invest regularly. I would also say I have a different.
Saurabh, I only know one thing, that markets will fluctuate. That's the nature of market.
I think I would have a little different approach. So when I started investing, when I started learning investing, we used to have a risk profiling form. So first I need to understand, I don't want to invest the money. If I lose, I want to sleep over it. I want to only invest the money where if it goes down, I can still put in more money. So my regular approach to this person would be, if you have 100 rupees to invest today, go ahead and invest 15 rupees or 20 rupees at one go. And then you start doing a lump sum investment. Because if, let's say, you invest today at 20 rupees and the markets from 18,000 goes to 20,000, then you will crib and say, oh, I invested a little lower amount. But if market from 18,000 goes back to 16,000, you've only invested a 20% of money, but you know that you will invest 80% more money. That is where you can start doing an averaging basis. But again, hire a coach if you want. If you don't want to hire a coach, there are a lot of direct coach available which are doing well. There are a lot of companies which are doing a very good surveys and marketing. Invest through them, but go and invest. The point is you should invest. And when I talk about investment, I'll give you a very good example again. You remember there was a reoccurring deposit which used to happen in fixed deposit.
Yeah.
Reoccurring deposit आपके अकाउंट में हर महीने 20,000 रुपए निकल जाते हैं, 30,000 रुपए निकल जाते हैं, 6%, 7%, 8% पे होते हैं. So you know exactly after 10 years, after 5 years, you will get 7% to 8% return. But this is a form of investing again. So fixed deposit is also a form of investing. Now, Amit, coming back to a question again, आज की तारीख में अगर किसी को fixed deposits की replacement चाहिए, where they want to earn not more than 7 to 8%, that is what their criteria is. Is there an option where people can invest through a mutual fund?
So Saurabh, India, the biggest problem in India is that people still do fixed deposits, and the tax brackets are in 10, 20, 30% tax bracket guys.
And this is 30% tax bracket. If
30% tax bracket guys are very happy paying those taxes. Mutual funds have similar kinds of product, and thanks to Government of India, it's a kind of a subsidy which they have given to us, that we give you 20% indexation benefit after 3 years. If you stay with a mutual fund, debt fund, which work exactly like a bank fixed deposit, you can save your taxes. The investment time horizon is 3 years, but the idea is that if your investment is doing well, you need not to interrupt it. You can keep that money for say 7 years, 10 years, even 15, 20 years, if you are predominantly a debt investor. The best part is that you're getting an indexation benefit. Let me give you a quick and a simple one how to understand this indexation benefit. Is that, suppose today you are investing 100 rupees, which is fetching you 8 rupees. So next year your 100 becomes 108. But your inflation here today is around 6 rupees. That means your 100 has become 106 in terms of inflation part. A normal fixed deposit investor has to pay 30% on 8 rupees which he has earned. Whereas a fixed deposit, a mutual fund debt investor has to pay only 2 rupees on that taxation, because 6 rupees is inflation and he has only earned 2 rupees over that. That means in 3 years, above 3 years investment, he has to just pay 2 rupees taxation part. That is 20% of 2 rupees. So you have saved down on your taxation also, plus you have completely mirrored down what your bank fixed deposit is doing for you. Yes, there are different funds. There are different categorization of funds when you are investing in debt funds also. You have to be very mindful when you're picking a fund which is similar to your bank fixed deposit. Yeah, there are products available for you. The best part is that you can save down on your taxes also.
Okay. So Nirmal, would you be able to answer some of the categories like you mentioned about dynamic
Yeah,
bond funds, banking categories, or
we have
arbitrage
to,
funds?
yeah, we have to understand, again, we have to explain to every investor what kind of, because it has an interest rate risk, something we have to explain. So I think the best substitute that I can think of is a banking and PSU debt fund, where you invest primarily in the banking and PSU side, which is supported by by Government of India, and mostly all AAA rated and backed by Government of India, like HPCL, BPCL, NHAI bonds, and all these things. So, and we can make a combination of fixed income funds in this. So it is very personalized. It is not a one right answer, a fixed deposit, and I'll name the fund. So we can work on diversified fixed income fund, depends on the time horizons. As Amit said, 3 years. Definitely 3 years indexation benefit is like a completely, almost there's a zero tax, because inflation and return are almost same. So today I think so 5.5%, 6% is the best one can think of, in multiplied by 3, 18% approximately, and that too indexation can be same approximately, I think inflation of 5%. So almost there'll be negligible or zero tax. So there are a lot of fixed income categories, and the DSP has a very good website. One can go through and read a lot on the fixed income instrument, how it works, and what are the securities, and understand the risk as well in this.
Also, I think there is one more advantage we forget about it is, let's say if you're investing in a fixed deposit, and if you tend to withdraw your money after 6 months, you will not get a yearly return, and then you get a penalization of 1%.
Yes, absolutely.
So, for example, if you are investing in a fixed deposit, let's say you invested ₹1 lakh in a fixed deposit at a 7% or 5%. 5% you will get taxed at whatever category you fall. Then if you withdraw your money within 2 months, you will not get that 5%, you will get only 2%.
Yes.
Or 3% maximum.
Which a lot of
I think
investors don't understand this, they think bankers, and it's a hidden thing again, most
no,
of
it
the
is not a
bankers
hidden thing. It is right on the paper. It's a white paper which they present you. And when you withdraw that money within 6 months, you get 1% penalized. So your 2.5% gets into 1.5%. So it's better you keep your money in the saving account. Then when you invest in a mutual fund through a route, if you want the money in within 15 days, you will still get that percentage of return what you're getting in a year's time. Because this works on again, we don't want you to invest for a shorter term. But again, there are investments which are available, and this is very good for the current account holders and business people, where you can park your business money, which you don't need it, in a deposits like mutual funds, which are debt funds, which are liquid money, which are money market funds, where even for a 7-day or a 15-day window, you will be able to get at least 3.5%, if I'm not wrong.
Even for weekends, even for Saturday, Sundays, you can.
Or even for Saturday, Sundays. That's overnight funds, right?
Am I right, Amit?
Yeah. That's overnight funds, yeah.
So that's overnight funds. So if you are a business guy, and if you think that there is a corpus which is sitting idle in your account, which is doing nothing, you can actually invest on a weekend and earn money and go and out for a dinner with a wife.
Yeah. There are 52 weekends in a year which money is not being utilized by anyone. 52 weeks.
So go and purchase something for your wife on a Karwa Chauth, I would say, right?
So 104 days money is idle. Friday you park, and Monday you can take it out.
And how fast is that?
It's fast. It's it's all liquid. We can do that. Amit,
so it's basically you just give an instruction, the money is in your account.
So you have to. So basically, it's a working day concept. So anything between Monday to Thursday, and if there is no holiday in between, so you put your redemption before 3 o'clock. Next day around 10 o'clock, you will get your money back in your bank account.
Okay, and there is no fees attached to it. There is no exit load. There is no entry load.
So in overnight fund there is no exit load. Yes, but in liquid fund there is a 7-day exit load. Generally, people who park money for 1 or 2 days, they prefer a overnight fund.
Okay, so the concept what we are trying to bring is, if you want to invest in 2-day fund, we have a 2-day fund. If you want to invest in a 7-day fund, we have a 7-day fund. Yeah. Not we, as in like the markets has that fund.
Yeah. So when generally, sort of the tendency is that when we talk about mutual funds, people or investors generally think that we are only talking about equity funds.
Absolutely.
Debt funds also, which caters to your fixed deposits need.
So it is as safe as you can invest your business money as well.
Yes, for in overnight fund, all the biggest treasuries invest in overnight funds. You can, access their annual reports, and you will find that they're also investing in these mutual fund schemes.
Okay. Anyone on the floor has a question which they want to ask? We have 9 minutes to go. Meanwhile, if somebody comes up and asks a question, let's talk about equity. 60,000 in market.
That's a favorite subject.
That's a favorite subject. 60,000. What do you suggest our investors?
So 60,000 is just a number, and we should not focus on the number. It's a journey. It's a journey which I think so that first of all you have to have confidence in your country, right? If foreign investors are putting truckloads of money in your country in last 20-30 years, I don't see a reason why we don't do it. So the only point is that your neighbors are eyeing you, that you're a guy who want to earn money for them, but you are not looking. It's just like your family member, which you're hesitant of. So I think so that the story goes along that, as I've told you, that it's an ups and down story. It will go up and down. It's not a straight line. 60,000 is just a number. I started my career in 2004 when it was 5,000. Since this was 5,000, right? So it has to go up, but yes, the journey is going to be very volatile. Nothing comes free in this world. You can't time the market. You have to make sure that you are on a right asset allocation path. You cannot allocate your debt money into equities market because equity markets are doing well. I am seeing a lot of investors today whose fixed deposit are at 5%, 6%, and they are questioning that why should I continue with my fixed deposit when my equity mutual funds is giving me 6% returns in two months time, right? So these are wrong things to do in these markets. It is your hard-earned money. The only thing, people like Nirmal, they come across a lot of investors, and it's a behavior thing, Saurabh. Generally 2 years back, nobody have questioned us that where to put money now. We were there, right? We were there. I'm sorry to say, but no portal has invited me to speak on markets in last 2 years. So this is the third thing. This is the third event which I am doing in last 15 days. When you come across such kind of situations, what first thing comes in your mind? That I have seen this before. I've seen this thing happening in 2007. So I'm not saying that markets go to correct, but I'm trying to tell you that it has to be a part of everybody's asset allocation to part in this Indian story. You have to participate in this Indian story. If you think that the government is doing right things, if you think things are changing on ground, if you're seeing better roads, better railways in last 4-5 years, which you haven't seen in last 70 years, I think so that this story is more promising going forward, but it's not a straight line. You have to make your bets that for next 15-20 years, I have to put my 20%, 30%, or even 40% returns should come from this market. Government is also forcing you to do that. Government doesn't want you to give you 8%, 9% fixed returns. That's why they're reducing their interest rates also on those schemes. The better you start, the better it is for you.
I agree with Amit on this. I started when Nifty was 2,500. I'm talking about 2003, 2002, 3,000 Nifty. Today Nifty is 18,000. And I truly believe in one principle, which actually works. Everything in my life I've seen. It is called Pareto's principle, 80-20. So you see 2020, what was the return? And 2021 makes all the difference. 2021, 80% of the wealth is being created in 20% of the time. Same thing in stock sector, almost all the stocks. I've never seen metal stocks doing so well. Whatever the reason is. So see, metal has been 5x today. So, and that's again, no one knows, that's timing that Amit has been mentioning. That time has to be there and a conviction has to be there. So, 80% of your portfolio return or 70% of your portfolio return has made in 2021 only. So who's the best, who's the winner in this? The winner is, those who have remained invested has seen the magic.
So Sakshi, I would love to answer your question once again with this chart, which I just found it. You said, is 20 years old a good age of investing? I'll see this is Mr. A and Mr. B. Mr. A started his investment when he was 35 years old. Annual saving, what he was doing is 1 lakh rupees. For 25 years, he invested. The total sum of investment was 25 lakhs. The rate of interest was only 8%. Value at the age of 60 was 78 lakhs. when this person just pushed the investment 10 years back. So instead of starting the investment from 35, somebody invested from the age of 25. So there was only 10 lakh rupees increase in the total investment, but look at the corpus which was being created. And we are talking about only 8%. So 78 lakh rupees, which this person has earned, has actually resulted into 1.86 crores if he just invested 10 years early. That's all the difference. 10 साल में 10 lakh रुपए फालतू लगाए हैं, लेकिन what he has got a benefit is more than 1.1 crores. That is the purpose of starting early. Similarly, there is another example where a percentage of 8% has resulted into 10%. जो return था वो 8% की जगह पे 10% हो गया. The investment period and everything was same. And again, the corpus was 1 crore rupees extra. So this is a power of compounding which works for people. Stay in the market is what is required. Am I right?
Absolutely.
Okay, so we are at the end of the session now. There are some important tips we want to give you. I know we are talking about equity. I know we are talking about risk, but it is very easy to lose your money. Do not go out and take loans and invest in markets. Invest only when you have money. If you want to start the investment thing, start with whatever is in your account. Start every time. Do not invest at one go. Take a feel of it and then increase your exposure. It is easy to make money, but it's easy to lose money also. You need to have a very important planning. Planning, it means invest, ensure. You know, when you talk about planning, you talk about what to be invested, where to be invested. You need to be certain about your emergencies. There are a lot of events which will come into your place, your kids' education, your marriages, everything. And then how do you retire? Once you take care of all those things, you really don't need to worry about your day-to-day life. Start spending money. There is a concept known as risk-free return, which I always say, if you really don't want to take a risk, you can still earn 4% in a fixed deposit. But 4% is something which is lower than inflation. So that means you're losing your money. What you want to buy 1 year later, you can buy today. And a disciplined approach of investment is what is required. Then the last thing you want is monitor, review, rebalance, and react. Monitor karo, investments ko, review karo, if it requires rebalance karo, and you need to react. You cannot just stay invested in a component which is not working out for you. Hire a coach. If you don't have a coach, there are a lot of information. Start educating yourself, but do not go for a WhatsApp university. Go with a proper websites where you can learn about it. Any final comments from you guys?
No, I'll say, don't speculate and invest, understand investing and understand risk. What is risk? It's not just a 4-letter word. So, that definitely a good coach can help you to understand. So, and must participate. Definitely don't leave this,
Okay, so since you mentioned, I have a slide for risk also, since you mentioned about it. So see, the risk is only turned out to be zero when you talk about a longer time horizon. 15 years mein risk gayab ho gaya. 10 saal mein risk gayab ho gaya.
Yes.
So risk is not investing in a equity. Risk is investing for a short term, looking for a higher return. Right, Nirmal? This is what you were trying to say?
Yes. No. That is a different thing, but definitely somebody has a different horizon. A 60-year-old will not have a 15 years thought process. He's a different thinking. He wants a cash flow. So that's why I'm saying it's very personalized. So it's not a common judgment for everyone. Definitely with time, what is a thought process of an HNI client is a very different from a normal investor. So it's very relative. I'll say there's no one line answer to it.
Okay,
that's why
Amit,
I said
final
you need
comments quickly.
So my
10
final
seconds.
comments will be soch kar, samajh kar, invest kar.
Soch kar, samajh kar, invest karo. Absolutely. Okay, so with this note, we would like to close the finance session. You can call us, you can talk to us. We are there to help you. We are not the organization only to talk about health. We are also talking about legal. We are also talking about finances. We are talking about everything we are talking about One Health. We are also talking about animal health. We are talking about environment health. We have hired about 102 villages over a period of time, and we are plantation. We are doing a lot of work on that. So this is a dream of Dr. KK, which we have started. Again, he's there with us. He's watching us. With this note, we would like to end this session. Thank you for joining. Thank you, Amit. Thank you, Nirmal,
Thank you,
for being a
Saurabh.
part